estate, as we all know, real estate is all local, it's all local. And so the little place here in Truckee overlooks a golf course, but is not part of the golf course community. That's for wealthy people over there. And so their HOAs are, I think, like 1,500 or $2,000 a month. And the HOA, even though this house overlooks the golf course, it's not in that golf course community. And so the HOA, I think, is about $38 a year. It's crazy.
Is that what
So
you think of all golfers is the wealthy people? You just lump us all into that category, huh?
are
Okay.
you going golfing tomorrow?
No, I went yesterday. Now, for those of you that are watching, I actually am kind of on vacation, and I use quotes for a reason because I obviously work while I'm on vacation, but I'm at the beach this week, so I did go golfing with our family yesterday. Little family competition.
Who won?
I did.
Right.
It's super fun.
Marc,
Super
you golf?
fun.
I do, as a matter of fact. Depends on the day how good or bad it is.
Felix is a
I
golfer.
I didn't grow. I grew up. Not that this is the Rob Chrisman show, but I grew up in a neighborhood in the Santa Clara Valley, south of San Francisco, and there I grew up in a neighborhood, and we were out on the street every evening playing football, baseball, or basketball, and no one on the street had no one was a golfer, no one was a skier, so I didn't have that. Uh, I didn't have that in my life.
It's never too late to pick it up, my man.
Yeah.
Felix, you golf?
A little bit.
He golfs a lot.
Tomorrow. My golf day is tomorrow.
Yeah.
Have you two ever squared off on the course?
No. I think it's coming. We've been talking about so much. I think the day is coming.
We'll see.
What did Aaron say? Something
She
flashed
said
up.
so many handsome devils hanging out with me today.
Just for you, Aaron, just for you.
Thank you, Aaron. Good to see you. Happy Friday. Okay, I've got a trivia question for us. We've got maybe 1 or 2 more minutes before everybody finishes piling in. While I like to think that, TMC is a really large organization, right? We're the largest independent mortgage cooperative in the country, but we're not the largest professional association in the world. Who can claim that title? The largest professional association in the world.
Does that include NAR?
Yeah, it would include any professional association. Pizza Makers of America. Okay. I see you, Olivia.
No, I'm not. I'm looking at my feet. I'll stick with my NAR guess.
Okay. AARP, B&I, David?
Oh, look at there, AARP.
Yeah. All right, Mark, what do you think?
Well, Rob took the NAR guess from me, so I was initially thinking like Major League Baseball or something. They're way too small, so I'll stick with NAR. I'll go down with the ship with Rob.
National Education Association. Felix, what do you think?
I would have guessed ARP.
AARP, okay. What is AICPA?
CPA? That might be a hint.
Oh, accountants. Yeah. Thanks, Tiffany. My vacation brain is not catching up. All right, yeah. It is actually NAR. At least that's what they're claiming. They claim that they are the largest professional association in the world. But another trivia question: how large is their membership?
I would once I heard AARP, I would have gone into the AARP camp because I'd say there are more old people than there are real estate agents. But
Yeah.
people people tend to always inflate their numbers, Melissa. Like I tell people my commentary goes out to 80,000 people when actually it goes out to about 80 people a day. So I haven't been caught yet on that.
All right, all right. Mark, Felix, what do you guys think? How many members do they have?
Number of agents have been about the same, but
Yeah.
not everyone's a member. I'd probably go with 1.55 million, give or take,
Wait a minute.
Yeah.
Are you saying there's like 20,000 realtors per state?
or more potentially, who knows, that are actually in NAR. Not all of them are required to be there, so.
Yeah.
That's true.
Right.
All right.
That sounds about right.
Wow.
We got a whole bunch of people that guessed it in the chat too. Yeah, they're claiming 1.5 million right now, members.
Oh, okay.
It's huge, huge. I don't
Hmm.
think we're gonna get that big at TMC, are we, Felix or Mark?
That's a lot
Yeah.
of reusing of high school prom photos
Yeah.
on business cards.
And three,
Well,
Brian.
now I can see how they could afford to write a check.
Yeah, yeah. All right. So we're going to talk about the NAR settlement today. We're, about 2 weeks from some of these provisions taking effect. So we are going to spend some time talking about that. But before we do, which is why my trivia questions were really around NAR. But before we do, I want to take some time and talk about the market. And so I want to maybe throw it over to Rob for a second to talk about employment data this week, the 10-year back below 4%. Like, tell us what's happening. What does this mean for all of us on the call?
Well, I hope everybody like me sold their stocks earlier this week. No, I didn't sell my stocks earlier this week, but you have a situation where if people don't have jobs, they can't spend money. If they can't spend money, then inflation is going to go down and the economy is going to slow down. And with the trend in the unemployment rate and the trend in non-farm payrolls, fewer people are working now. The employment the employment picture, as they say, has been relatively strong for months and months and months. And that's one of the things that the recession naysayers will point to. They'll say, yeah, we've had an inverted yield curve for a couple of years now, or however long it's been. There's no recession on the horizon because everybody's employed. Unemployment is below 4%, and it's very strong. And when people are working, they spend money, and when they spend money, it helps the economy. Well, now with unemployment creeping up, it's not necessarily a terrible thing, but it is an indication that maybe the locomotive's running out of steam a little bit. And so with that comes the stock market selling off, because the stock market views that as, oh my gosh, the economy is going to slow down. You continue to hear about layoffs. In fact, my opening line today was about Intel laying off 15,000 people, which is a big chunk of people. But you also have a situation where if fewer people are employed, maybe some of the steam will start to come out of the real estate market a little bit. And the real estate market has been one of those things that has been a shining star. Sure, it shot way up during the pandemic, but it's continued to gradually move higher. And so when you have that situation where it's gradually moving higher, it's nice for people who own homes. It's not necessarily great for first-time home buyers who are trying to get in the market. But if the economy starts to slow down, rates come down, affordability tends to pick up a little bit, because with lower rates, first-time home buyers can get into that market. And now suddenly, and Felix can attest to this probably, now my buddies in the capital markets world are saying, hey, we've got to warn everybody about early payoff penalties again with rates coming down. So it's kind of this global situation where the Federal Reserve has kept rates high, overnight Fed funds, basically. So they've kept rates high. They'll probably cut rates in September. They take August off. In fact, the Fed will kind of be out of the news for most of August, aside from a meeting that the Kansas City Fed puts on in Jackson Hole. But really, the Fed is expected to lower overnight Fed funds in September, but the market has already priced that in. And so with the move in rates, the bond market is kind of where it is, given an expected Fed cut in September. So people should remember that even though the economy, the stock market, and I'm blathering on here a little bit, but the stock market is not the economy. Okay. Stocks have gone down, but they've also been going up significantly for quite some time. So stocks have come down, but interest rates are down, and that should help our business, and it should help people who are trying to perhaps refinance their 7.5% loan. And it should also help first-time home buyers.
Yeah. And I agree with you, Rob. Was early payoffs, we might have significant issues, right? Because I would rather have gradual decline in rates versus drastic, something like today, right? I mean, 5% is up 80 basis points. It's just insane. Question to you is, I totally agree with you. The market did price quarter decrease, but what if they decide to cut half? Because that's not out of the question. What will happen then? I mean, are we going to have another big, pickup of 75 to 100 basis points?
I think they'll go, well, anything's possible, right? I mean, there's a lot of data between now and September when they meet again, and it's good. I mean, the Fed reiterates, oh, we're data driven, which always makes sense. It's like, if something new comes along, sure, they're going to take that into account. Nobody, as Melissa likes to say, nobody has a crystal ball, and they can't tell where rates are going to be a week from now or a month from now. A week ago, we didn't know rates were going to be where they are today, right?
Right.
And so if they go a half at this point, it would be an unexpected surprise. You have lenders out there though that have to keep their knees bent, as they say, and they're dealing with early payoffs. They're dealing with renegotiations in their pipeline. And I wrote about it today about Fannie Mae and Freddie Mac adjusting their loan level price adjustments, which impacts the loans that are already in the pipeline, and not in a good way. I'm hearing more and more about that. I put that in today, and a lot of people have written to me saying, "Yeah, we're getting smacked." So there's a lot going on out there. But yeah, if they go a half in September, that would be pretty drastic. Nope, and the Fed doesn't want to be accused of making knee-jerk decisions and reacting in a knee-jerk fashion. I think a half would be. We'd have to have a lot of really bad data between now and then for them to move a whole half. Mark, what do you think?
Okay. Actually, I just sent a message out to my sales staff about this very topic, and providing them with their list of past customers, saying you better be prepared, because if you're not, all the larger people out there with their AI models and everything else and monitoring the market are going to be all over your customers. So you at least need to be top of mind. We've established a program where we explain to the customer, hey, this is as early as we want to pay you off, but if you work with us, I'll pay for your appraisal, I'll do something else, but don't pull the trigger just yet. So we're trying to mitigate it. Already seeing it.
100%. We do the same thing. We do a lot of education to our sales staff. So when they close deals, when they talk to their customers, to educate the customers, please don't just go and refinance because you receive some kind of mailer and they're offering low rates. Give us a shot. Don't put us in a big bind, and stay loyal, just like we stay loyal to you. So
it's such a fascinating business. You guys, everybody on this call knows, because you have investors out there, investors in servicing, and not to single Freedom Mortgage out, but I'll single Freedom Mortgage out because they've been buying their fair share of servicing. Well, they have been buying servicing, and Mr. Cooper's been buying servicing, and other servicing buyers have been out there willingly buying servicing rights from small and mid-sized lenders who have needed the cash to fund their origination operations. And so now those buyers of servicing this is the day they've been waiting for. You can bet that they are mining that servicing database and telling borrowers, hey, rates have dropped since you got your mortgage, and here are our rates now, and give us a call. So very interesting what's
sure.
going on out there.
It's happening.
For sure.
All right. Well, do we want to talk about NAR a little bit? We're 2 weeks away from some of those provisions taking effect. And I know, Mark, you and I have talked a little bit about some of the things that you're seeing. And Feliks, I think you're still in a place where it might not be affecting your world as much, but I'd love to hear from each one of you guys. What are you hearing from your sales teams?
Well, I'll start. I feel the biggest thing the mortgage community and real estate community needs to do is to educate the customers, because sellers hear all the news and without actually knowing and understanding what's going on, they're just telling the realtors, oh, I don't have to pay buyer's commission anymore. I'm just going to pay whatever 2.5% and you go sell my property. Right. So educate, I think, because there's not enough information and people don't do enough education, the sellers do not understand how it really works, because realtors already came out with different ways to go around the system, right? Because the biggest thing, you cannot advertise any buyer's commissions on MLS, but you can advertise it on your personal website. So as long as you can redirect people to your personal website, that's the way I see the realtors do it. And I'll give you an example. My wife is actually a realtor. So every time she shows the house, she has to sign a buyer's agreement stating that if she cannot get commission from the seller side, they have to pay her commission. And it's challenging, to say the least. So, I mean, time will show, but it's we'll see what happens, because sellers just thinking they're going to make extra 2.5% on each property, because they will not lower the listing by 2.5%, right? So in the end of the day, if that will happen, buyers will just pay whatever the price for the property, plus they will have to come up with commission to the buyer's agent. What I don't like, yeah.
So sorry to cut you off, but for simple-minded me, in the old days, I'm going to sell my house for $100,000, and I'm prepared to sell that house and pay 6%. And whether that 6% goes to my agent, if he brings in the buyer, or they split it 3% and 3%, I'm going to sell my house for 100. I'm going to net 94,000.
Yep.
How will it be going forward?
Oh, if I had crystal ball, I'll tell you. But,
well, I mean, what they're talking about doing now.
What they're talking about, that they will sign an agreement for reduced commission. That's what they're talking about.
My agent.
Your agent will be signing, and then when a buyer's agent will be putting an offer on the property, they will actually try to negotiate their own commission with the seller, if it's not advertised by the seller's agent.
Okay. So I would be prepared to pay 2.5% to my agent. Let's say it's Melissa. Well, let's say it's Ann, your wife. Let's say it's Ann, your wife.
Okay.
I'm going to pay her. So when I ink my deal, I agree to pay my $2,500 to Ann. And then let's say Melissa brings in a potential buyer. Melissa needs to contact me and say, hey, I want whatever percent. And me, the seller, I'm negotiating with Melissa, the buyer's agent.
No, she will provide it in as a part of the contract to your agent, which your agent will talk to you at the end of the day, and they will say, well, we want to put an offer on the property, but we would like to also include buyer's agent commission in it. And if you agree, then they will add an addendum that the seller will also take care of buyer's commission.
So my biggest fear about all of this, I guess my biggest question mark about all of this really is how this is going to impact the first time home buyer, right?
Oh.
If they don't have down payment, if they don't, how are they scraping up and being able to actually say, I can afford commission if the seller is unwilling to pay it? And Mark, I know you guys work a lot with that. What are you seeing in your market?
Yeah, no, for sure. I will tell you, in our market, ever since the announcement came out about the settlement, it was already affecting real estate, at least the listing side of it here. As to Felix' point, all of a sudden the sellers are like, hey, I don't have to pay this. But then the realization will start setting in that you're not going to have as much traffic in there. Your house is going to sit around longer. And then what you're really ultimately going to see, in my opinion, is now the seller's going to come in or the buyer's going to come in, put in an offer, but virtually every one of them is going to be asking for concessions to pay for that. So now the concessions will go towards real estate commission rather than closing costs and prepaids. But to your point, Melissa, is the first time home buyer, in my opinion, is the one that's really going to get hurt, because not too many that I've worked with are going to be willing to sign an agreement that says, I'm guaranteeing I'm going to pay you 2%. And they just don't have it. They barely have enough to get into the house to begin with.
Well, and Matt in the chat makes a really good point. He says that he's having to take into consideration that realtor commission while he's doing pre-qualification, right? Because that's affects cash to close.
We've already started doing that right off the bat. You automatically assume cash to close is going to be 3% higher based on sales price, just because you don't want to be that lender that gives out the approval letter and all of a sudden they can't close because they don't have enough funds. That's but the bigger problem I'm having is from the lending side of it is, at least in my immediate market, like I said, I'm in Southeast Michigan, so you can't throw a stone without hitting a mortgage broker somewhere. But is what they're telling all the real estate agents from an education perspective is, oh, hey, Fannie and Freddie, they changed all the rules. You can now use seller concessions to pay for the real estate commission. No, that's not what they said. And they changed nothing. So we've been trying to do some educational pieces about, here's the announcement that was made in April. This is what they're saying. It's normal and customary. But yeah, just hearing how people are trying to spin it just to keep people using them. It's interesting. But I actually see a future in the not too distant future where your average income for a buyer's agent is going to probably drop to 1.5% tops.
Right.
That's going to be more affordable for people, but I could actually see that happening.
Which is
also
to Melissa's point, because if I'm especially first time home buyer, but any home buyer, especially if they're moving to a different area, I need somebody in my corner.
That's right.
I want Melissa or Felix's, I want Ann representing me, because I don't know if all these grasshoppers in the basement is normal, or I don't know if the black mold in the ceiling is normal. I mean, I don't know what's normal if I'm moving to Florida, for example.
Yeah.
So it's like, who's going to help the buyer truly? And if I'm an agent and I was getting 3%, now I'm getting 1%, am I going to put less effort into helping that client?
Oh, and to take that a step further, to make it even worse, is you could have someone go in without any representation. You go, oh, I'll just talk to the listing agent and go through them.
exactly.
Now the problem is, can the listing agent really purport to serve both the buyer and the seller? No, they cannot.
Right. Oh,
But
yeah,
the buyers will be just without representation.
Yeah, those cicadas or however you say it, that's normal. That happens every 200 years. Don't worry, they won't be back. And then they're like back next year. Anyway.
No, it is. I mean, now is the time the realtors, they really have to spend some time developing their sales pitch, their elevator pitch for, what's my worth to this transaction? Really being able to explain to a customer, hey, look, this is what we do. Now, in years past, especially the past few years, it's been, fishing with dynamite, going to buy for a listing agent, because any number of people would come in. But I definitely see the tables turning as this continues to go into effect.
Yeah.
Are y'all seeing, or really either you, Mark or Felix, are you seeing any kind of different education programs for first time home buyers to help them to understand how to navigate this and how they, you know, how and when and if they need representation?
I've not
On our side, we haven't seen anything yet.
Yeah, I've not seen anything new come out. We've done some stuff locally with some of our, with some of the first time home buyers classes we've done. And much to their surprise, they were like, what? We have to come up with how much? So it was eye opening, but you know, we're only hitting a few people at a time, unfortunately.
Right.
And then we actually have some real estate brokerages here in Southeast Michigan where their approach to this has just been, we're not changing. We're not going to take any listings unless the seller's willing to pay for it. You know, pay some sort of commission on it, which, you know, great for kind of keep the market the status quo, but I can't see that lasting.
Right. Because you know somebody will come in and say, no, I will do it. And here you go.
Yeah.
Melissa, do you want to end this call on a brighter topic?
Sure. You know, you always have last right of questions, so go for it, my friend.
Well, Felix or Mark, I mean, no, I was hoping to throw the ball into your court.
Oh,
Melissa,
okay.
but
You can throw it into my court. You can direct the
being-
question however you want.
you play pickleball?
No.
Oh, all right. I will say, so Felix or Mark, for the originators, for the actual LOs who are on this call, what advice do you have, or what will you be telling your staff about renegotiations and extensions? So not that, but lower rates are a good thing. They're a bright thing. It's a good thing, but doesn't help your lock pipeline. It doesn't help somebody, 3 months ago that you gave a 7% loan to. So what are you telling your originators about the current rate environment and how to act?
Alex or Felix, you want to try that one first?
I don't know, man. I was hoping you will, because it's not an easy question. You wanted to end on a bright note. This is not a bright note.
Well, Felix, all right, Felix, where are you going to golf tomorrow?
That's a bright note.
Yeah.
In the local country club. Yes.
But I'll throw out, I mean, this reality, this is where, as you know, if you're running an operation out there, this is where, you know what, read your lock policy. Hopefully you have something in place. We do. The good thing for us, and at least from the origination standpoint, is if your turn times are really good, which this is where I'm going to pat myself on the back for those, because I mean, we have an actual our average turn time here in my institution, from the day a file submitted to the day it's clear to close, we average 16 days. So big swings like this, you know, they hurt us, but not nearly as bad as someone that's taken 30, 35 days. As one of my loan officers likes to say, time kills. But then I remind everyone, read the lock policy. This is where it's at. It has to move by this much. And if it does, then yeah, we're both, you know, we're gonna take a hit probably on those, because it's cheaper than the EPO we're gonna get if we force them to close and they pay us off right away. Because I'm not gonna lie, I've done that to other lenders before, where the borrower ended up getting stuck with them, and I was like, well, if you want to stick it to them, refinance right now. I'll help you do it. So I'm not gonna lie, I've done that to people.
Right, and once again, we are reminded why extended locks, when originators say, hey, can we have like 9-month locks or 1-year locks?
Yeah.
Why that makes no sense from a capital markets perspective. I
Mhm.
do have a last question. Melissa, what kind of golf ball do you use?
Oh, really? That's your question? I use a Titleist Tour Soft.
Felix?
Pro V.
Mark?
Yeah, I typically hit the Vice golf ball, but we'll hit between that and the Pro V1s.
Okay. Was that educational, Rob? Did you?
My golf ball collection consists of the ones that I didn't hit down the 18th hole at the miniature golf course that I kept. So they're all like yellow and pink and blue and green. It's very colorful.
Well, there you go. I might need some of those shipped to me. Both of my boys are golfing right now, and they're going through golf balls like there is no tomorrow. The course that's here at the beach is really, really narrow. And when you're not on the fairway, you're in like the big pampas grass stuff. So, I mean, it literally just sucks the balls. I think we went through 16 balls yesterday.
Is it,
Oh,
is it,
wow.
between my
Is it,
kids.
is the grass pampas or pampas?
Oh, I don't know. I've always said Pompous. Did I say it wrong?
No, that's fine. Egotistical grass that it is.
I don't know. That's just always what I've called it. All right. Well, we so the idea behind for everybody that's listening, the idea behind today's format being a little different. We normally have, a guest on that we ask a whole bunch of questions and bounce ideas off of. The idea behind today's was really to get the perspective of an IMB, to get a perspective from one of our depository friends, and take these big topics that we can take and discuss how each one of those things is impacting their world a little differently. So we're going to take this kind of, wasn't really a debate style, but we're going to take this this approach where we are able to see multiple perspectives around something in the future too. So looking forward to continuing a similar format, and wanted to say, obviously, thank you so much to Feliks and Marc for joining us. The insights on the market, obviously the insights on your, what you're seeing around the NAR settlement was super helpful. So appreciate you guys spending some time with us. And thanks to everybody online that's been watching. We appreciate you as well. Have a fantastic Friday, and we will see you again here next week. Have a good
Thanks,
one,
Aaron. Thanks, Bernard.
Thanks for having
Thanks,
me.
Melissa. Thanks, Felix. Thanks, Mark. All right. Bye.